Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Tuesday, January 19th. I'm already in June. January 19th, 2021, just after 6 p.m. Central Time. My mind's going on the inauguration tomorrow, today, the last day of President Trump's full day of presidency. We'll get the pomp and whatever the glory in the morning as he flies off to Mar-a-Lago, and then Mr. Biden and his administration take over. We had a taste of that today with Janet Yellen in front of the Senate Banking Committee, or Finance Committee. I forgot which one she was in front of. Maybe they're the same. And to make a long story short, I think she did a fine job. She let you know right up front that her new job is that of getting the stimulus going, making sure the economy is on track, and that, yes, she believes that the $2,000 stimulus check should be part of it, and I believe she believes in the $1.9 trillion that'll be asked for. This is the honeymoon period of her and the Senate, and then after that, we know what's going to happen. It's going to be a division to a degree, wondering how things get done there, and we'll see how this first test goes for the president-elect. Remember, between tomorrow and Thursday, you're probably going to see a number of executive orders starting to come out as they start rescinding a lot of the executive orders that President Trump has had in place. One of them will be this travel order that he wants to rescind for January 26th. And you know they're not going to do that. That's going to stay in place, where you're going to need to get those the proof that you don't have COVID wherever you go abroad for a brief period of time. Makes sense. In the metals, you saw that the market pulling back a bit. Copper continues to find good support at the 359 level. The silver market keeps probing under $25 to see if it's got support there. And the gold's got a little bit of everything going for it. But right now, I think a lot of the fear and what drove gold up and Bitcoin today, in all fairness, was a mixture of fear that something bad could happen at the inauguration, or bad can happen around the country, be it in state capitals or cities, as the inauguration takes place. We all have our fingers crossed that isn't it. Remember, a number of economic reports get shifted because of Martin Luther King Day yesterday. I took off the whole weekend, and that was it. Now I'm back in the saddle, so you'll get your weekend updates and everything else. I figured, what the heck, a long weekend, why not just enjoy it? When we look at the gold market, the first thing that to me is evident is the bias in the market is down. I define that by the market having closing prices under the 18-week moving average of closes. When the market's under it, I say it has a downside bias, over it an upside bias. The second thing I'm looking at is the chart, and it keeps reaching down, including over this past Sunday night up to Monday noon, and then today's trade. It's all in one. That's how they do that. And you could see you got down to that 1800 level briefly. Now that happens from time to time because you get thin market conditions when the American trader walks away from the market, as many of us do for that 2-3 day period. So that's what happened. You even saw the mini silver get out of whack with the full size by 25 cents. You don't see that very often. That was just a natural arbitrage, a gift for those that were fleet-footed, but you'd have to have computers written to do that because it happened so fast. But it did. Look at the two lows and you will see what I'm saying. When we take a look at this market, and I add to it the swing line, it's clear to me you have a downtrend, and it's not broken unless you take out 1864. The pattern is lower high, lower low. The market is trading underneath the 200-day average and the 18, and it's drifted the most it's done, the 200-day, since back here just before December ended. And now it's come back. The resistance in the market, and I'll talk resistance first, the 18-day average, support the lower Bollinger Band. You hit it on today. You hit it back about 5-6 days ago, and the market keeps bouncing off of it. But the market bounces, but it keeps making lower lows. That's not a bullish trend to it, and the market just hasn't turned away from there. That is important too. So the bias continues down. Where I don't think you're going to get a lot of selling in this market is because you're oversold. Oversold conditions typically don't attract new sellers. So I'd be a little cautious here. What I call this market is a downtrend, downside bias. We have hit the objective again, It was here also getting to oversold condition. That's twice. And we don't seem to be able to continue under the band and pushing it even lower. In the gold-silver ratio, you can see that the bias favors the gold ever so slightly as the market is staying over the 18-day moving average. When the bias is up, it means the market favors higher numbers. That would mean more silver to buy 1 ounce of gold. In the silver chart, you can see the battle instead of the 200-day average here is the 100-day. The market slipped, as I said, got to the Bollinger Band through today. And now tonight, the market back up to that 100-day average. The trend is down. To negate the downtrend, the market has to get back over 2578.5. Should it fall from here, I look for the Bollinger Band 2434.5 to be the next support level. As I said, the copper, I look at the 359 level as a big support zone. It's turned out to now be 360.26, but if you go through that, you'll see where I came up with those numbers. Stochastics are flat. You're not in a trend. You now have a higher high, a lower low. Underneath the market, you have a bid because there's so much talk of stimulus packages both in the United States and Europe. So something you do want to pay attention to. In the platinum, you have the swing line down. So that is bearish. You have lower highs, lower lows, but all you do is go back to that 18-day average and keep holding it. In the meantime, you've worked a market that was overbought here out of that condition now. So we have a market that's got a downtrend, upside bias, and neutral momentum. In the palladium market, you've got a higher high and a lower low. The market made its run last Thursday, couldn't quite get to the Bollinger Band, and then they washed the market out between Sunday and Tuesday, and tonight the market's again playing at that 100-day average. So this market is not yet getting a bid, even though it is a deficit market. What does that mean? It means we're going to use more platinum that we're mining each year. Eventually, this market might wake up to that. It depends on auto sales. They have to pick up. I just saw that Europe, the worst auto sales in Germany, from what I understand, in the history of their record keeping. So that gives you an idea what's going on. U.S. sales were a disaster, but they are saying that this economic stimulus can pick up from a bad year 10% or more in the U.S. next year. That's more catalytic converters. In the dollar index, what we're looking at here is still an uptrend, higher lows, higher highs, went back these past 2 days to challenge the upper Bollinger Band, fell back. It is an overbought market that has hit its upside objective in an uptrend. That's how I would define that market. So you put this all together, you got a game plan you can look at. You can see the stock indices are trying to continue on tonight. I think that's very important. And another thing that you'll find important, you know, I write a market letter very different in my full market research than you're probably used to. Think of the Reader's Digest. I gave up writing special lengthy reports about 2 years ago. I can do better with headlines, bullet points, and then a quick paragraph to explain things, and then I tie it all in with videos. In a video, I can in 10 minutes do much more than a 30-page letter would do on a subject. I can cover it better and so on. So what I do is I put out twice daily in my full research all the points of the day that I think are important. That is your fundamental part. Then I take you into the charts, and in the charts in the video, we're going to cover moving averages, window envelopes, all the different studies that I use. I'd like to give you a free trial to it, period. If you've had one, you can get one again. I think that you'll see the value in these little changes that I made that turned out to be big changes. All you need to do is give my staff a call. You can go to our website at www.iraepstein.com. Under the right-hand side, just keep going right, don't go up anywhere. Free offers. Sign up for it. My brokers will take care of it. I'm Ira Epstein. You have a great day. I'll see you tomorrow.